Hi guys, today we are going to talk about NIO and the earning results for NIO in Q4 2020 that was just released on March 1st. For the day today, the day after earning, NIO was down 13% to $43.29. It is a significant decline from an all-time high of about $61. It does definitely represent an opportunity to buy if you are interested in NIO long-term. We're going to analyze charts and fundamental analysis. If you are interested in my thorough analysis of NIO, I did have a recent video on comparing Tesla and NIO. I'll put the link down below so you can take a look at that video and see my view for NIO in the long term. I do think NIO has potentials, but it does have a lot of work to do ahead of it in order to catch up with Tesla, if at all possible. Here's the daily chart for NIO the day after earnings, this candle right here. We can see that it gapped down and opened. So it closed yesterday at about 48.50 and it opens today at 46.20. So it is about $2 gap down and it continued to move down throughout the day. NIO's right now is trading in between the 50-day simple moving average of 54.55 and 200-day simple moving average of 29.61, with the next major support to be at 38.62. So if NIO continues to fall tomorrow, I do expect it to stop at around 38.62. In looking at the RSI, I do notice that there is a RSI divergence, bullish divergence for NIO. So while price was going down, the RSI has been going up. This tells me that within the next week or so, NIO should start moving back up. If you are interested in buying into NIO, now is a good time, or it could go down to 38.62, and that is a good entry point as well. If it doesn't hold at 38.62, it could go all the way down to 29.61, which is 200 days moving average, and I see that as the absolute bottom at the moment. I don't see NIO falling off from 200 days simple moving average, given that it's still relatively bullish in the grand scheme of things. When I zoom out to the overall bigger picture, still the daily chart, it does look like NIO is building a head and shoulder right now. This is the left shoulder, this is the head. If it bounced back up to 50 days moving average at 54, that makes another shoulder. And so beware, because it could fall all the way down to 200 days simple moving average. In either case, I do see a buying opportunity between now and 200 days simple moving average, depending on the price action. If you're interested in creating a position in NIO, I would not wait all the way until 200 days simple moving average, because it may not get there. I would start now with maybe 20 to 30% of your full position and start building that position as NIO falls down. If you are a trader, a swing trader, right now it is more bearish than bullish for NIO. And if it does bounce back up, I do believe that it is a head and shoulder pattern going to be in full formation. So it could potentially fall back down to 200 days simple moving average. Here's the financial highlights for NIO for the fourth quarter and the full year of 2020. Revenue is roughly $1 billion US, and quarterly delivery was 17,353 units, making the entire year delivery of 43,728 units. This, in comparison, Tesla delivered 499,000 units in the entire year of 2020. So NIO is still a baby at this point when it comes to ramping up and delivery of vehicles. The entire year of 2020, it earned almost 2.5 billion in revenue in US dollars, which represent a 133% year-over-year increase as far as revenue. Also, NIO managed to have positive gross profit margin for Q3 and Q4 of 2020. This is great news in comparison to Q4 of 2019. It had almost a 9% negative gross profit margin. This signifies that NIO is able to make money off of its vehicles Overall gross margin was 11.5% for the full year 2020, compared with a negative 15.3% for 2019. So anytime you go from a negative gross margin to a positive gross margin, that is a defining year for the company. So 2020 was definitely a defining year for NIO. Despite the positive gross margin, NIO still had a net loss of $813 million US for the entire year. Here is the revenue chart for NIO from Q2 of 2018 to current. You can see the blue area here is revenue generating from vehicle sales, and the red area is for the category name Other. This I believe to be battery as a service that NIO is currently offering for all of its vehicles. So 2020 is definitely a good year for NIO. Revenue growth trajectory seems to be hyperbolic for the entire year, and the same for other revenue category as well. If you look at operating income and gross profit here, gross profit has increased for the entire year of 2020, which is great news. Once again, gross profit equals revenue minus cost of goods sold. Cost of goods sold equals direct material, direct labor, and overhead. Overhead means utilities and other things that are directly related to production. Direct materials meaning the steel, the various components within the car, and direct labor means the people that are working on the assembly line, the people that are working directly affecting the products. That excludes people that are on the general and administrative side, such as finance, accounting, HR, legal, and so on and so forth. So going back to this chart here, the operating income is still negative for now, but it has been better over the last 4 quarters. Net income is still a pretty ugly chart right now for NIO, but the good news is that it is better than 2019. So NIO has been able to minimize its net loss for 2020, and I'm hoping that in 2021 and 2022, this position could become positive net income. So let's recap. You have a company that is projecting to deliver approximately 90,000 to 100,000 vehicles for the year 2021. The company also has positive gross margin for Q4 2020, and for the entire 2020 is the first year that it was able to turn from a negative gross profit margin to a positive gross profit margin. And this company is trying to expand into Europe in 2021, continue with battery as a service business model that is going very strong in China. It can control its indirect costs, namely general and administrative, sales and marketing, R&D. It could easily become profitable at the bottom line in 2021. Once it is profitable, the stock price is not going to be at this $43 and some change. So overall, it is a very good potential. It is an alternative to Tesla. It will ultimately dominate the China market, but it is not yet going to be a global leader in the EV market. And that is it for this video. I hope you find it helpful. Please consider subscribing if you are interested in the content that I create here, and I look forward to seeing you in the next video. Bye.